Good morning, traders. Market has just opened. I'm just now getting on here to take a peek. First 30 minutes is pretty volatile, so I typically don't mess around with it too much. But I did want to show you a few things with the Topstep platform, just kind of the way I set up my day. This is a daily chart here I'm looking at. We had a little consolidation up here at the top when we hit the all-time highs. On the way up, we had this big fair value gap on the daily, which we filled in yesterday with the wicks, but there's this small one right here down here at the bottom. But this is the way I would typically set up the day. Just I make some hypotheses. Of course, yesterday we had a big fair value gap to the downside. So trading back up into this is a possibility. We did take out the low from the previous day in the overnight session right there. So I would just mark a few things on here like, okay, here's our low of the day right there, or low of the overnight session. And I usually make those the lows, I'll make them red. And then the highs, of course, we got the high of the day, high of yesterday. I would go ahead and mark that as well. And I'm just looking for low-hanging fruit, so I'm not going to go all the way down into this area to try to find something. But anything up above, I usually will make green. And so I could just clone that one and put it here. Now, if we do end up trading higher, we could possibly see consequent encroachment of this fair value gap. So I go ahead and put a fib on that fair value gap, and I mark the consequent encroachment. And I make it yellow, and I label it CE. Daily negative fair value gap. Okay. So I know what I'm looking at when I see it on the chart later. That's weird. For some reason I couldn't click that. Okay, so now I'll get rid of the fib because it's just too many lines for me. And you could label these as well. That one's not quite to the low. This is kind of a neat feature. You can hover over the candle and see up in the top there the low of that candle. So it's at 20382. And then you can take this line and change the coordinates to 20382. And then it'll be exactly where you need it to be. And I'll label that one low of the day, or even overnight low. Depending on when I go to the next screen, will be what I change that to. This will be high of the day. And this one I just simply named yesterday's high. Now, having those reference points on there is pretty important. Now I would take it back down to a 4-hour chart and see this one was hit at yesterday's AM session. So it's a possibility that it could get hit again. This one was made last night at 6 o'clock. And you can see we've kind of been aiming downward. We took that low out from the 15th, and now we're kind of just hovering in the middle of that range. On the 4-hour, this one would come all the way over to here. We're hovering in the middle of that range right now, and we know we don't fiddle too much in the middle. Now let's go back down to the 1-hour chart. We've got a few areas of interest. This was at 2 a.m., so that would be our London high right there. Overnight high right here at 11 p.m. You could mark out the London high if you want, because that's kind of important. A lot of times it'll get taken. But it's very close to the overnight high, so I'm not going to worry that too much about it. Very small fair value gap here on the 1-hour. Very, very small one. We could mark that out if we wanted to. I think I'm going to leave that alone. We don't really have any other fair value gaps in this 1-hour chart. In the 30-minute chart, it's very clear that we aimed for this low when we took it out, and then we're going back up. So are we going to aim for this high? Possibly. If that's your hypothesis, if that's what you're going for, then you would want to buy. You'd want to put a fib on this, and you would want to buy when the price is below the 50% level if you're going to be aiming for that high, or even this high, because once you're above the 50% level, you're buying at a premium. And you can see right here we have a fair value gap, and also right here that we're trading into right now. We just got past the halfway point. But this one right here, this wick just wicked into the halfway point of that one. See right there. Wicked even all the way through it, but now it's pulling back, and that's on the 30-minute. So now we break her down to the 15-minute. Okay, so we have a little fair value gap right here. And you can see we're kind of wicking into that center of that gap. Now, this one occurred at 8:15. We're in New York time. So our opening candle is actually right here. All of this happened overnight. If we get rid of all the overnight and just go to regular trading session, now we're dealing with only yesterday's New York. And you can see we had this opening gap yesterday, and that's what we kind of traded down into. We did not take out this low. That could be a possible target, and I'm going to mark it. I'll mark it as, let's see what time of day it happened. AM low from yesterday. I'll make it red. This takes out the overnight stuff. If you were looking at this as we opened here, we closed there, it's important to see where the algorithm is referring to. So you can see it went down to the midpoint of that, a little bit past the midpoint of this opening gap. And this is actually the new week opening gap, because this was Friday, this was Sunday. So we have that new week opening gap. Wick down into the middle part of it, have not taken out the low. Always remember the wicks, they do the damage, but the bodies, they tell the narrative. So we're trying to determine what the narrative is for the day. and where the market is most likely to trade to. This is that fair value gap, but it occurred outside of regular trading hours, but that doesn't mean it's insignificant. I'm going to go ahead and take off this gap for now. We'll go back to extended trading hours. And here we try to develop some sort of a narrative. So this is a 15-minute candle chart. We came up here, yesterday's high. We tried to go take it out overnight. We didn't quite make it. Tried a couple more times, didn't quite make it. And then we started to march down, pretty aggressive march down. And that all began during the London session today. A lot of times New York will just continue the London session. So I am a little concerned that that low was taken, but we do have that AM low, which is, AM low from yesterday is right here. We just created a new low here. So if we go back over this direction, where's our next low? Let's go to a higher time frame and let's see if we can find another low that it could possibly be aiming for. We definitely have a double bottom here. That would be a good one to mark out, because if we end up falling out of bed, we'll probably aim for that one right there. And those will be relative equal lows on the 4 hour. All right. So that's my basic hypothesis. I don't think we're going to be trading all the way back up to here, so I'm not even going to mark anything. I think an aim point for up, if we're going high, is that CE or the high of the day so far, or yesterday's high. We already took out the AM low from yesterday, but we took out this low for today. Of course, on this big chart, we have fair value gaps right here. I'm wondering how these wicks respected that fair value gap right there. We respected it. We wicked through it, but the bodies is what we're interested in. The bodies tell the narrative. So we wicked into this thing, and then we rejected off of it, and we came back up. That's kind of a point of interest for me. Today, we wicked that out, and we're going back up. So what is the bodies telling us in this little section right here? That's what I'm looking at. To me, the bodies are saying, I like this area. I like it real well. I might just hang out here for the day. Or maybe it's saying, as I'm a larger time frame guy, I want to be selling short up here. And I want to be finding willing buyers that are willing to buy as this price is going up, because they think it's going back up here somewhere. So right now in this larger time frame, I don't see much of a narrative other than we are hovering between two fair value gaps. There's one here, and this one I already have highlighted. This is a lower time frame fair value gap. So we're hovering between two fair value gaps on the larger time frame. As we shrink it down, we can see how those are being respected. 15-minute is that 1 hour. Wicks do the damage, bodies tell the narrative. We have yet to break this high. I feel like if we're going higher, we'll break this high. Those are relative equals on the 15-minute chart right there. That's worth marking. So if we break that high and show a willingness to continue up, then maybe you take a long and aim for a higher spot. I don't know. Okay. The way it's respecting this fair value gap, I kind of like that. We've just reached 9 o'clock. Let's go to a smaller time frame. Lots of chop. You take your little measuring tool here and you can measure one of these candles like that. This is this big green one right here from top to bottom. That's 50 points on 5-minute run. That's going to stop most people out. My stop is typically only about 25 to 30 points. So that's a little too much for me. It's too volatile. We measure this red one right here. We went up and down around the world. On that 5-minute, that's 63.75 points. So most likely, if you just quick scalp, you might be able to get a little bit of money, but don't marry a position. Don't think it's going to be going to one of your targets from here because of all that chop. We can even take a look. These are 1-minute candles. Let's look at this big red one right here and see how many points that is, and just compare it to what you typically put your stop at. I usually advise people on 1 micro to put at least a 20-point stop. And see, that's 41 points. 41 points. Very, very hard to predict where it's going next right here. And with the size of these up and down candles, 40 points, it's a lot of risk. Even on 1 micro, that's $80. I typically trade 3. So we're talking $120 there. But right now, I would be, respecting the fact that I have a 15-minute fair value gap, and it's been respected there. I have a low that was taken out earlier today. And you can see it, the AM low, it was taken out with this one. So we have a possibility of trading lower since we are respecting this, but this is also a fair value gap on the 4-hour. So we could just come back down and respect that area. Right now, we're just dancing between 2 fair value gaps. Now remember, regular trading hours hold more weight than overnight hours. So this low has not been taken in regular trading hours. So that might be an aim point. And in the regular trading hours session today, we have these lows that appear to be aimed for. But remember, 50% rule. If you're going to want to get into that trade, you don't want to go short unless it's above this line. If your narrative is we're going to take out these lows, you don't want to take that trade unless we're above the range, the 50% mark of the range. This is the entire opening range here. So we want to be above here if we're going short. If we're deciding, no, we're going up, we're going to go hit those highs, then we go long, and this would be a decent place. This would be a better place. Ideally, I'd like to see it take the lows and then go long. But that's what we're looking at for just today's price action alone. Looks to me like so far it's shaping up to be a high resistance liquidity day. I haven't checked the other markets to see if they're doing something similar. And they pretty much are. That's the S&P 500. Let's see if I've got the Dow. There's the Dow. They're pretty similar price structure, high resistance. We run for liquidity, but we put up a lot of movement in between the liquidity grabs. So right now it's a sit on your hands and wait kind of an environment. I do like the fact that we've tried to go higher multiple times on this time frame and failed. These are kind of inviting, these lows down here. So this is jagged and this is more straight. So I'm kind of liking the idea that we continue down and take out these lows. But we're going to go up here and take out these recent swing highs first. That's kind of what I'm looking at. But right now, the narrative is just too choppy. If those candle bodies are telling the narrative, it's saying, oh, we went up a while and then we went crazy for a while. And so I'm not really seeing a clear picture that I'm willing to jump into the market on. But when things do start moving, I do have some levels that I can look at. I do have highs and lows marked out from the daily chart, larger time frames as well. The AM and PM session highs from yesterday. Well, this is the right there. Yeah, this is the PM high from yesterday. This is lunchtime high. That's a pretty clean straight line right there too, and it has not been taken in regular trading. So I'm going to mark that one over here. I'm just going to mark this one right here because afternoon session is referred to differently than AM and lunchtime session in the algorithmic world. So I'm going to mark that one. It occurred at 1:59, and I'm going to mark it as the PM high. All right, and now we just sit and wait. As you can see right here, we open with a nice gap down. Typically, this gap will fill in the first 30 minutes. Let's put a mark on it. We open there. It'll fill 50% of the way in the first 30 minutes, and it did. Will it fill the remainder of the way? Don't know. What I do know is I've seen days where this thing has tried to fill the gap, like it's doing right now. It's tried to fill it, tried to fill it, tried to fill it, and couldn't, and then fall out of bed. So I'm going to be watching real close. How is it responding to these candles? Is it taking them out and going higher? Or is it trying to reach them and failing? Because that's a good narrative that we're going lower. I'll catch back up with you later if I see something panning out. I'm bearish. I'm thinking bearish today just because of the gap down and the failure to fill all the way. So I want to point out something right here. You see how we came up here and we took out this high, but we left these two highs? And now we've come down, we've taken out these two lows. This environment, it's not even considered a high resistance liquidity run. It's more of a seek and destroy environment. And I'm quoting the ICT, Michael Huddleston, Inner Circle Trader, on that. What the market is doing is generating liquidity. Okay, so people that, retail traders that are long, are taught to move their stops as the price comes up the latest swing low. So they're going to put all their stops here. Some of them may not have moved and they would have left them here. So we come down quickly, we take them out. And now if there are any short positions, they're moving their stops to here. So the market is going to move and take those out and then continue to do that dance until it decides this range is no longer this range and this time frame is no longer profitable. Then it will move to areas of liquidity on a higher time frame. So maybe we go aiming for some of this stuff then, or some of the lower stuff down here. This area to me is real inviting. They both are, but as you can see, we're in the middle and we don't play around in the middle. It's best if you wait for an extreme to get taken. It's just like on that smaller time frame. You can trade these smaller time frames. An extreme got taken and an extreme got taken. So you can hop in. You can wait for a low to get taken and jump in and grab a few points there. You can wait for this high to get taken and jump in and grab a few points there. What you don't want to do is get in the middle of the range and expect for one of those to get taken. So you wouldn't want to buy here with the expectation that it's going to take that out. You could buy here with the expectation that it's going to get taken out. And once it moves in your favor a little ways, move your stop to where you don't lose any, because in this environment, it is very likely, these are low probability trades. It is very likely that you could get taken out. So if we just run it down to this little section right here, we've got a low, we've got a high. You could even go in here and place orders right above this high to sell. When that order fills, then you would put your take profit down here or here, low hanging fruit. The most recent swing low is where you'd want to aim. In a seek and destroy environment like we're in right now, I don't want to fill that order because I'm not in the mood to take any high probability or low probability trades. But just watch how it reacts when it tops that candle right there. If it tops that candle right there, watch how it reacts. It may be going to these. I'll mark them. That's our high of the morning session so far. It may go ahead and whip through those, but it's a pretty safe bet that once it does either of those things, that it's going to come back down. I don't think we're going to go on a run from there, but we might. One thing that I've learned in all of my years of trading is what I think doesn't matter. I know when it takes out a high, there's a pretty good probability of it pulling back at least 10 points. And I know when it takes out a low, there's a probability of it pulling back at least 10 points. How many points is that pullback? We take out that low. I'll measure that green candle right here. Watch. Right there. That's 23 points. On 1 micro, that's $46. On 3 micros, that's $120. That's not bad. It's not a bad little trade. Now looky here. We came up. Candle bodies are respecting the halfway point of that wick. That could be saying something. It's come up. It did not take that high. But we did generate some liquidity here, 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 and here. Do we have any fair value gaps? No. So as it stands right now, anyone bullish is probably putting their stop right here or possibly here. Anyone that's bearish, wanting the market to go down, has their stop here. If they had moved it to here, they just got taken out. As those orders are building, which side gets the most orders is where the market goes next. That's why it's unpredictable and low probability. There might be a lot of people thinking, oh, we're going long, so they're putting their stops here or here. I could come over here and show you live action, I suppose. Let's see, yeah. So, yeah, if I put in an order right there to buy, log into your broker trading account. Oh boy, I'm not in my account. Let's see, trading panel. Move that to where I can actually see it. Paper trading, always do paper trading. Don't use your real money. One thing about paper trading that you won't see in live market is whenever you click an order, it won't react. And they can see your orders, those stops I'm talking about. So I went ahead and placed an order there. Now, so my stop loss, if I'm a retail trader, would be to go below these wicks here. Well, this is a higher time frame. Let's put it on the 1 minute like we were watching before. Okay, so my stop as a retail trader, as we're moving up, you put your stop at the most recent swing low. So this would be where the stop is right there. And then you would put your take profit. A lot of times you'll put it way up at the high of the day, okay? So when we crack those, then we'd get that money. In a high resistance seek and destroy environment, you don't want to put it all the way up there. You want to put it here. Because those people that are short are going to be putting their stop at the most recent swing high. So when it pops that, watch what happens. See, that should have filled my order, but it didn't. I don't know why. That's crazy. Yeah, it didn't take it. So if we go back over to Top Step, we'll see what's really happening. Now we have all these highs possible. That's really weird. This one runs 10 minutes a little bit behind, so that may have been the most recent swing high. But that should have taken it. I guess because it's running behind, that's why it's saying I've got profit there. So it just, I don't know. I don't know what to tell you there. Okay, so now we're making a push for these highs. Let's see what happens when it takes it. I'm focused on this one because I think it's going to leave those for a little bit later, but it may go ahead and take them. This is a time of day, market conditions where a fair value gap is forming. If you play off of that, you'll get smoked. You'll get smoked. So we did take this high just by a tick or two. I'm going to move over to my practice account and I'm going to take a short right there. And I'm going to put my stop right there above it. That's $50. And I'm going to put my take profit right here below this most recent swing low. We can even go to a 15-second chart. And I'll put it right here below this one. And just see what happens. See if it gets down there. May not. This would be considered micro scalping. You know the retail game. As it's going up, they're putting their stops below the recent swing lows. And it may not be this one. It may be that one. But usually it'll wick a little further down than, see, it just took it by a tick right there. See right there? It took it by one tick. Okay, now it filled me. And that was a $50 order. Now that it's taken that, may not come back down. But I'm going to try. I'm going to try to buy 3 right there. I might get spanked here, but I'm going to put it right there. Dadgummit, I missed it. You don't really want to chase because in this environment, it'll most likely fill again. And then, of course, we're going to aim for the most recent swing high, which would be here. You don't want to aim too high. You might even want to just aim to there. Because even there, that's $30-40. If we aim to that one, let's see what happens. So now we came down, we took out anybody that said, oh, we're going long again. I mean, it's just chewing people up. But if you can get on the right side of it, you can make little micro scalps like what I'm doing here. Now we took out the liquidity here. Anybody went long, they might have a stop here. Could have it all the way down here. Where would you feel like, okay, I'm definitely wrong? I would say if it goes past the halfway point of that fair value gap, I'm definitely wrong. But if we take out this liquidity, like we just did, we made relative equal lows there. That's kind of nice. So now taking out this would be a really nice sell short. So I'm going to put an order right above it to sell 3 short. And hopefully it'll fill that one and come back down and take these out. Let's see what happens. Oh, it didn't quite make it. That was so close too. Maybe if I put my take profit right equal to them. Let's see what happens. Oh, okay, there we go. There we go. And now we move our take profit to these relative equal lows. We went ahead and took the highs there. I'm going to go ahead and sell 3 more. And now these relative equal lows become our target. If we get taken out, we're going to lose 223 there. I don't like that idea. Let's let the dancing stop for a minute. Oh, we're breaking. We're breaking. That's the hazard of range play. Once it breaks, you don't know what's going to happen next. So in this situation here, I would go to a higher time frame. We've got a fair value gap forming. We could possibly come back down, take out these lows, or we could leave this open. This fair value gap could stay open, in which case you would want to take a long and aim for these relative equal highs on the 15-minute chart. And I think that's actually what I'm going to do, and I'm going to do it in my trading combine. I'm going to put an order right about here. Let's let this candle finish. Okay, I like that. I'm going to do it right there, buy 3. And I'm going to put my take profit here. I might get smoked here just because I'm doing what I told you. I'm buying in the upper half of the quadrant. So they've got a willing buyer in the upper half of this quadrant. But that relative equal highs on the 15-minute chart just looks too juicy to me. We did pull away from the range with a fair value gap right here. And we have respected the halfway point of that fair value gap. So I like the trade. I do. But I am worried about liquidity down low. On a smaller time frame, this would have taken out several stops. But just to be safe, I'm going to move my stop to where I'm not going to lose any money on this trade. It's looking good. See if we can pop them. I'm going to go ahead and add 3 more. Move my stop where I don't lose any money. Oh, man, come on. It's dancing too much for me. I'm taking it off. All right, so, $60. When you add that high in the range, you can, it can cost you because when it pulls back, it starts working against you. I'm going to go to a smaller time frame here. I like it. I'm going to get in. Stop goes here. Take profit right above those relative equal highs. And that should pop it. I don't like the dancing at all. I like for it to go ahead and hit it. Come on. Five, four, three. I'm out. All right. See, I get real nervous when it's in that situation. I mean, this is it going to take that line? Abso-freaking-lutely. Is it going to come all the way back down here first? Maybe. So I go ahead and take my profit. That's one thing I've definitely changed is I'm not waiting for the market to take all of my profit away. I'd rather go ahead and take it. Now, that level is so inviting. I have seen it go to a level like that and leave it. Leave it for another day, not even leave it for the same day. These lows did not get taken on that rundown. Let's try one more stab. Put our stop here. Put our take profit there. And let's just cross our fingers and pray. Go ahead. In this environment, you want to go ahead and take the risk off as soon as possible. Okay. This is a 15-second chart, and I'm using the levels on the 15-second chart for when that algorithm's dancing. See, I don't like the way we're coming back down here. Got about 5 seconds, and I'm going to kill it again. All right, it already took me out. So because I moved my stop there, it's $10 gain, but it may not hit that level. And you really, really have to be cautious in these type of conditions. Look at that. That's a 1 minute chart. It's going up and down and up and down and up and down. You would probably be safe to buy it when it takes out a low. But man, I'm very, very happy to be up $100 on this. Very happy indeed. Because I've had days like this where I'd be down $1,000 in these same conditions. So your best bet, if you don't know how to trade these conditions, is to sit them out. See, it just took those relative equal highs on the 15-minute chart. Now I'm going to sell 3 short right there. And I'm just going to try to grab another $50 or so when it takes out these lows. Now, I may get smoked. I may. But because of all the resistance we've had up to this point, and we just took out relative equal highs, I don't think we're going to just go on a blind run here. I really don't. I think we'll pull back a little ways. If it doesn't hit my take profit and I do get a little bit of green button, then I'm going to go ahead and take that too. This looks like it's aiming for something else. There's some highs right there from yesterday. It may be aiming for those. So this is just regular trading hours session here. So yeah, I think we're aiming for those. Does it mean that we won't come back down here first? Absolutely not. This trade might work out. Let's see. I know one thing's for sure. All right, now we're popping those highs right there. Swing high. That's end of the day yesterday. Could go all the way to these, and in which case I would lose $150. Being short in this environment is not recommended. At this point, I don't think the pullback to here is going to be there, so I'm just going to try to get just a little bit of low-hanging fruit. That's $16. Take some risk off. Come on, push down. Push down. There's a volume imbalance right here. It's probably going to push into that. I don't expect to get a whole lot out of this trade, but if I can just get something green, I'd be real happy. I'm even going to move it closer. $7. Get me 7. Okay, I'm out. 5, 4, 3, 2, 1. Help. Go, go, go. Yeah, that was it. That was it. Okay, I'm out. All right, that was a loser. It's probably going to go down there, but I just can't take it. I get too nervous. I don't like to stay in trades very long. So what I am going to do is put an order to buy 3 right there. And so when it cracks it, my expectation is that we're going to go on to the high of the day. I get smoked. That's my expectation. You know what? I'm not even going to wait till it gets there. I'm going to buy it right there. All right. Now, we got 150 on the risk. I don't want that much. I'll put it about there. Take profit. High of the day's there. PM high from yesterday. Oh, man, it got me. You see that? That's that high resistance. Is it going to that high? Absolutely. Absolutely. Let's buy our 3 more right there. And let's just aim for this low-hanging fruit right there. Had I not moved my stop there, we would have been okay. But I moved it. Make it spanked again. What I was saying about liquidity earlier. Oh, man, come on. These 2 lows right here is what it was aiming for. It didn't quite take that one. It could still. We did put a fair value gap to the downside there. But I have a feeling we're going to the PM high. Now imagine you didn't have any of these chart levels marked out and you were just flying blind. You're trying to guess where it's going next. It'd be very difficult to do. Taking my risk off. At this point, if it comes back down, we're done anyway. Tell you what. I don't like the way it's doing. I'm taking it off right now. So I think right now what I'm going to wait and do is wait for that high to get taken and see how it reacts. That's where the high probability is. Getting in here, expecting it to hit it, low probability. When it hits here, it's pretty high probable that it's going to come back down. I'm fairly confident it's going to go take that out. But is it going to go straight there, or is it going to do more of this number? Who knows? So I went from being 100 to the green. Now I'm 10 into the hole. That's how quickly your money can evaporate in market conditions like this. I love each and every one of you. I hope you can gain some sort of insight into how the market moves from this video, why it moves, buyers and sellers, and all that stuff you hear from other sources is completely incorrect. It moves to areas of liquidity. And occasionally, when there's a big news story, it moves where the big money wants it to move. And on those days, it's called manual manipulation. So why didn't we take out that high there? That is not normal movement. We took out this high, but not that high. That's why this is a low probability. Be kind to yourself. Be kind to one another. I'll talk to y'all next time.